Let's dive into safe haven assets today and how this is playing out in the market. I think you don't want to miss this one. Let's just jump right in. I do want to thank our sponsor today, and that's Tangem. This is actually where you can go in and get into self-custody. The way you do it is visit Tangem's website and get the 3-card set, because this is like a credit card, works with your phone. Get a 3-card so you've got a backup, and begin your process on securing your own self-custody crypto. And you can do that pulling stuff off centralized exchanges, dropping into your wallets, and of course, it's very easy to set up. This is one of the best ones out there. Make sure and use our link down below. It does help the channel. All right, let's get into it today. I wanted to bring in DataDash. He had came in last week. We thought, let's have him back now that we've got some more volatility in the markets. So great to have you back, Paul. How are you?
I'm doing well, Paul. Glad to be back. How are you, my friend?
Oh, good. I'm going to play a clip for you because this is getting into the silver all-time high that we experienced this morning and what this might mean for the market. Let's cut to that SOT 1.
Look at these shorts.
Gold and silver just sitting there, and then bam.
And there we have it, $51.
We're already at $50, Clem.
Historic precious metals times.
Really interesting to be alive, in my opinion. Suppressed for, well, 45 years.
$1.20 in silver above U.S. futures.
The market is now in backwardation.
And a shortage in London.
It's my opinion that ends in a failure to deliver.
Notice to U.S.-based clientele, suspending all metals shipments to the United States to just 135 million ounces, roughly half of the market's daily trading volume.
This has happened in the past, but not this extreme. It's a slow-moving short squeeze because there's no fucking metal available in London.
Do you think silver could sustain above $50?
Unless suddenly peace breaks out, it's going to go way further.
What I'm here to tell you is that this is a fake high, a trap. You're going to see another run up in crypto. When Bitcoin hits $150,000, silver will be $35. You won't find silver in the shops because the shops will be accepting Bitcoin for their silver. That's going to sound, it probably sounds crazy to you. Type yep if you think that sounds crazy to you.
All right, so he, of course, you know, listen, the ninja's always doing ninja things, you know, so, and I love him. We had him on the show once. We've got a $50 silver coming in. How well does this, how well does this chart out, Paul? Is this something that we're going to see a short time high? Do you feel like this starts to leverage in like a lot of these silver bugs are saying right now where there's just not any supply? What do you think?
Yeah, you know, this, I'll just go right over to the chart on silver. So earlier this year, I don't know, okay, perfect, it's showing there. Earlier this year, we were trading, you know, into this region here, like $30, essentially where that gentleman just said we might come back to if Bitcoin pushes higher, which is interesting. The fact that they've all, you know, generally in the past, you would have thought like, okay, something like Bitcoin pumped and then gold and silver would wait and something like that. But they've all just been moving in tandem. So that's an interesting concept. But anyways, we were trading in this region. Personally, I was just looking just on the technical side of things, a little pushback into this area, which we got at 28. And then that would launch us into the new, this is not the all-time high, but on this, you know, was going to be that next region. And $44 was the next major area I was targeting, basically from the beginning of the year, just to see if we'd get a cool down. Obviously, that was the next major just Fibonacci resistance that we had at the time. Just no, you know, just basically all gas, no brakes, right through it. You've got a nice little wick here that I'm sure many will look to this like it's potentially a blow off top and things of that nature. With this move, I mean, it's not that it couldn't be, but overall, I'd say as long as we're staying above $44, which means we could cool off here a bit. I mean, that's probably, you know, it's about a 13%, you know, little pullback if you get it. Back test this little region. I mean, I don't see why we wouldn't continue higher towards 60, which is the next just major area above here. And I mean, again, it's a place where, for me, I'm always urging the caution at these places because this is talking to somebody who's invested in silver already, not necessarily someone who's looking to buy brand new silver today, right? The risk is so high for the pullback versus the continuation, but when we're looking at it, it's just, it's an unstoppable train right now. That gold, I mean, all the assets that are just seeing all these highs right now.
Well, I think, you know, you look at the slight pullback on Bitcoin, we're going to get to that in a second, but Bitcoin, of course, has retraced a little bit. Would you buy Bitcoin over silver and gold right now? What would be your play?
It's always such a, if I'm looking at it in the sense of a risk management profile, it's, you know, silver, just is coming up and breaking an all-time high. Gold is basically just doing the same, but yet Bitcoin, however, has, at least from our recent all-time highs, up 100% on that. Yeah. It's a tough one to say. Personally, I guess I would probably go lean into more of a gold or silver in comparison to just Bitcoin being so high right this moment. But across the board, I would just say wait for a pullback for any of the three. And Bitcoin would be my real choice of the three. But if I had to, pick something right today based on where they're at, it's a little tough to just go all in at $120,000 Bitcoin compared to, 4,000.
Right.
Granted, those market caps are so much bigger. So I hope that makes sense, but yeah.
Yeah, for sure. Well, we're going to get into Bitcoin and chart it because there could be some possible entry points for some of you that did miss the all-time high with Bitcoin. But back to the point on silver, a lot of this is really centered around delivery, physical delivery, which is one of the things that is going to start really causing a little bit of pressure in the market, which could possibly push it to $60. This would be insane if that occurs. The real question is, do you think some of the silver bugs will start to exit that market if we do see that kind of top? Because many people would look at silver and compare that to maybe even where gold had come off the ground at about 2,500 and now it's trading at over $4,000 an ounce. So
right.
I don't know. What do you have any experience with the silver community in understanding whether or not they're hodlers? I mean, they've been holding for a long time. I think they are.
I was going to say, I think they're the kings of hodlers, yeah, if they're anything to that. I think it goes into the idea, too, that where everybody's probably anticipating we are going, with everything reaching these highs as well. I know that everyone's, waiting with bated breath for that big crash that's right around the corner. That's been right around the corner since, 2016, probably. For me, I actually do anticipate that we will see a sizable correction into the next couple of years, 2027, 2026, potentially being the start of that. And with somebody that's been holding silver already, I would imagine that they probably would hodl it out. They probably may look back after we hit something like $60 and you might see a slight retrace, like 30%, and wish they sold. But overall, I think that they're going to hold. I think that that's like the XRP community of metals.
Interesting. Okay. Well, let's jump over to Bitcoin because I want to get into a couple of points here. Bitcoin hits a new all-time high, 126.2 that very day. Then it crashed. Coincidence? This was a whole lineup around a thesis that was pushed out there. You then responded right here on this. What exactly do you feel happened during this pullback on Bitcoin?
Yeah, so on the couple months back, we were talking about Bitcoin. Let's just flip over to it real quick. And I was looking for potentially $130,000. And that was into the week of September 29th. Let me see if I could pull it up really quickly for you here. It was right here. So earlier this year, I was looking for the September 29th, week of this 29th, I guess. So that does take us into, October 6th, what have you. And that's a correlation among a couple of things. This is based on a little harmonic pattern here. There's also a larger one at play. And another piece of it is just taking simple Fibonacci time, which realistically, if you were to just span out, the person on that tweet did the same thing. They just basically counted out how long that we were in the 2017 bull run, from low to high, and essentially we did the same thing here in the same time frame where we, topped out our last rally in 2021. If you were to take the time from the ultimate low here and extrapolate that out, it was going to be the week of the 29th, or AKA 6th of October. And so a lot of people are looking at that week in time, and it just so happens that we came up and put in a high on that exact date. And in the short term here, one of the things, especially in that video that I put out now, is that with that being something that's being said, Paul, it's something that I feel like is interesting this time around, because if you've ever been in this market in 2017, 2021, at every high, we always had the euphoria, everybody's super excited, everybody's looking for much higher. This time around, I think you mentioned it earlier on X, is that PTSD is kicking in. Everybody's very, fragile around this market. I think that everybody's trying to catch the top and sell out before the big crash occurs. And with everybody thinking that one way, I just feel like it's just we're positioned in the opposite again right here. So even though I do see a pullback in the next coming months here, I don't think it's here yet. And where we're at right now, I think is setting us up for actually a short squeeze. And just locally here, I'll go back to the chart. Just locally as a trader, I look for the same setup almost each and every week, which is basically where we put in a high for the previous week and then the new week starts, and anybody that took short positions over here, because this was our high last week and this was the all-time high on October the 6th again, or I'm sorry, this was the 6th here. But we came up and we took that high, putting in the ultimate high there now, and then of course you're stopping out anybody that took some short positions here. You're also getting breakout traders entering right here that, you know, are coming in on the all-time high break, and then we start to pull back here, right? And that fuels a bit of a pullback. And when that occurs, especially because it was on the 6th now, and everybody's seeing this idea that the 4-year cycle is done, the market is topped, there are so many people aggressively shorting this market right here. And ultimately, all we're doing, Paul, is we're just pulling back. Again, one thing I look for is you get these really sharp moves up. You get these really sharp moves up, and then we look for Fibonacci retracements, just keeping it simple. A lot of times we look to the gold pocket, but more times than not in a strong uptrend, you just come back to the 382, and then you get the continuation to whatever way we're going. That level comes in pretty much right about where we're bouncing at right now, this 19,500, give or take. And to me, I've actually been looking at this region as a pretty big area to see the next bounce up. And I think that we're, again, looking in the sense of a short squeeze, which meaning there's so many people shorting this market, yet the price is not coming down. And then usually a market maker or a larger entity comes in and just pushes the price way higher. We get these sharp moves to the upside. So I'm actually anticipating a pretty big move to 130 plus in the near future here, more than likely from this region we're at right now.
Well, and this gets into this whole thesis around risk versus and opportunity really at the same time. There was a clip that kind of explained this a little bit. Let me play it for you.
Well, we're looking at the market in a couple of different ways that are frankly colliding in a way that makes us more concerned about the action going forward over the next quarter or so. So we're looking at these markets as stretched between, new all-time highs. We made 4 new highs during a government shutdown where the fiscal problems are really thrown in our face on a daily basis. And also where gold is making new highs and moving in a direction that looks parabolic at this moment. Which is telling 2 totally different narratives of risk and optimism simultaneously, which makes us concerned about the direction going forward.
All right, so risk and opportunity playing out right here, Paul. Kind of to your point is that we're seeing this short, which could be a little bit of a fake short squeeze. People think and anticipating that this 4-year cycle is done. Your thesis is this is going to continue possibly into 2026. I want to back that up for you, and then I want to go into that explanation because this is Citi Bank talking about Bitcoin bullish for 2026. Take a look.
Correct me if I'm wrong, but I think going into late 26, your forecast for Bitcoin and Ether are pretty good, yes?
Not mine, but our teams. Yeah. So we're looking for continued follow through there. It kind of comes back to your discussion earlier on how to think about your alts in terms of gold and crypto. And I think your commentary is spot on there. I mean, I think we just have to allow that. You have a very aggressive momentum-driven equity market, and so I think people don't want to miss that. So you're looking for your hedging opportunity, and the way we see it, in addition to central bank buying, as you mentioned, I think that those 2 asset classes become hedges of choice as you're trying to navigate this ongoing strength, highly valued but momentum-driven equity market.
All right, so 2026 driven through momentum, most likely from the equity market. We also have, this whole theory around the Fed and how this plays out into May of next year. You and I had a chance to kind of touch on a theory that you've been working on last show. And I wanted to expand a little bit more because I think it's in alignment with what Citibank is kind of talking about right now. Can you explore that a little bit with me?
Yeah, so you're talking about the 20-year housing market cycle, essentially?
Yeah.
Okay, yeah. So in a nutshell, and this has been really the backbone of my overall high time frame analysis for going on almost 10 years now. Basically, when in 2012, funny enough, I remember seeing this guy on a napkin on YouTube back when YouTube felt like it was watching VHS movies, and this gentleman put on a napkin and basically drew out this schematic here and said that if you don't buy a home before 2017, the next best time wouldn't be until 2032. And it really stuck with me. I didn't really know, technically what he meant by it. Then I started following some of these 18 to 20 year housing market cycles that I came across it by a gentleman named Phil Anderson. So he's the original creator of this setup. Not that I necessarily created it, but going off of the overall years here. And what I've done here is I've stacked up 4 iterations where this is the beginning year. This is the mid-cycle slowdown that we always have an ending point before a face-melting rally, basically to the all-time high, blow-off tops. Usually it's always met with high inflation, high interest rates, and everybody expecting a continued recession from this point, just to have the overall high come in, and then we restart this cycle again. So in the 50s, we started this, 7 to 10 years go by. In the 60s, we had the, and also this is met but with a black swan event right in the middle each and every time. So 50s you start, you come up to the 60s, you got the Cuban Missile Crisis in that time frame. A couple years go by, high interest rates, high inflation, everybody expects it to continue lower. We go up to the 72, we restart this again in 75. We run up, black swan event at the time was Paul Volcker was the Fed chair at the time, and he was going crazy with interest rates, and essentially that knocked everybody into the recession at that time with like 20% interest rates. A couple years go by again, nothing crazy, only a few, I think it was actually only 1 full year of recession, but give or take in this window, high interest rates, high interest, inflation, everybody expect a recession, push this up. Now the next 2 iterations are interesting here because now we restart and you're in 93, you get 7 to 10 years up. We have a couple of things, you had mentioned the dot-com bubble. We had 9/11 also in this window, and same thing, just 2 to 3 years. By 2003 is when we kind of bottomed this out. We had high inflation, high interest rates. Everybody expected the recession to continue. What did we get? The blow off top to 2007. And again, this is off of the housing market, but it really means, the stock market and now the crypto market. And the crypto market has always been interesting to me as when it was born, because it was born in the beginning of the last, essentially this next rally. 7 to 10 years up, what do we get? COVID, right? Everybody looks to COVID, thinks that knocked something around in the charts, but realistically, that was right on time for the black swan event that knocked us into a 2 to 4 year time frame. End of 2023, where were we? Everybody expected a recession to continue in 2024, high inflation, high interest rates, right? And then what have we seen ever since then? Nothing but all-time highs across the board. So my target area, which is wide, I understand, does come in at 2026 to 2029 if I'm for the next high. Realistically, I'm leaning heavily on 2027 to be the high, which means that 2026 could still very well be another year where we see just consistent, there's going to be pullbacks, of course, but more consistent ups in gold, silver, all the indices, Bitcoin, crypto. It's just one of those things that's just not stopping, I think, until that time frame.
Yeah, and it's very interesting because you look at the process in which these all line up almost in unison. Why the wide range, though, between 2026 and 2029 versus some of the other years where we've seen those a little bit tighter?
So just personally, I guess it's been 18 to 20 years has been the average. So it's obviously a wide average as it is. So for me, it's just one of those things where I'm just mentally prepared for 2026 through 2029. It's probably not the time where I'm going to be deploying brand new capital into a long-term investment strategy. That's where I'm going to be looking to scale out heavily from everything I've put in. So I present that idea with the, in the case that yes, 2026 still could be that last little burst or even into 2027, but it's not probably the best time when looking, through history to be deploying new long-term capital. So, again, it's a tough one to kind of lay out, with the wide range like that. So just a little safety net. But like I said, I'm leaning more towards 2027 into 2029, really. And 2029 is the 100-year cyclical anniversary of the Great Depression. I think that between the two of those time frames, we're very well going to get a huge market collapse.
So when you look at Bitcoin as it is right now, Paul, first of all, I want to ask you this. How would you cycle out of that market in 2026 if Bitcoin does an all-time high here and it does get a blow off top near 150 or 180, like some people are talking, even though Citi's talking about over 200K, how would you cycle out? I mean, if you are in those kinds of assets, gold, silver, Bitcoin, altcoins, where would you go? Real estate's going to be at a drop in the, we're going to see all sorts of carnage there as well.
Right. So really quickly here. So to put a big picture on it, my answer actually would be Bitcoin. And the reasoning behind that is that I think the Bitcoin, and I don't have the chart on me right now, but because I have to pull it up on a different site, we could do this on another day, would be fun. But if you correlate, and I'll go back to me real quick, sorry. If you correlate how, again, if you look at that 20-year cycle theory, and maybe we're coming to a peak at 2027, 2028, it's interesting when I compare gold and Bitcoin because 20 years before that, our last, major high came in 2008, technically 2027 or 2007, sorry. And when did gold get its ETF? The only one asset in this world we can compare Bitcoin to. Gold got its ETF in November of 2004, 3 years before the high, 4 years before 2008. When did Bitcoin receive its ETF? We got it in 2024, potentially 3 to 4 years right before this next global collapse. And if we look back, the one asset that held through, we got a pullback, don't get me wrong, when the initial 2008 drop came, I think gold pulled back 20%. But from there, doubled its market cap between that and 2012. So I foresee the same setup for Bitcoin to occur. So to me, buying Bitcoin on any major pullback is the play. And in my scaling out schematic here. So as things come into major profits, I'm pulling that out in the green days, leaving it in cash or whatever until big red days. And then I transfer it over to Bitcoin or Ethereum, something along that lines. But Bitcoin is kind of the big play. And what I just want to be, clear here too. I know that sounds like it's like, oh, Bitcoin's just going to go up from here. So again, this is one of the biggest setups that I've been tracking for years. This goes all the way back from 2018. This takes us to our FTX low. And while we were trading in this region, I timed out both that this was going to be the gold pocket in time. So just like we can look at Fibonacci retracements for price action to reverse to or to drop down to, you can actually extrapolate time Fibonacci, so where you're going to see pivots in the market. And off of the last few moves here, this was actually where we would get the next leg higher that would come in. And that was last September. We have gotten that last leg higher here. The target zone of this is 122,000 to 140. I gave a little wiggle room for a little blow off top scenario, but I don't think we're going to see that. And for this setup here, it's already valid technically. So we could be at a high, right? Everybody could be right, and the bear market's about to start. I find it hard to believe that we would be, but it is there. In my thought here, I think we actually push up just a bit higher. Again, that short squeeze locally that pushes us to like 130, 130s. I think 130 to 135 is probably that sweet spot that would make everybody target 150 at that point, would catch everybody off guard because now you got this whole October 6th date that, okay, whatever. Picturing we push up, this setup right here has a target zone back towards about, I'd say the 80s, 90s K, but I realistically, I think we come back for this tariff low. That's my biggest play is that around this region, we pull back to like 74-ish, maybe in the next couple months here, beginning of 2026. And then that's our next major opportunity for the next slingshot for Bitcoin to continue up through 2026 and 2027 and really seeing those really big, pieces that come out of it. And I think that it can see $200,000, $1,000 down the road.
Interesting. All right, so that is a big thesis there to follow along here. We're going to have you kind of trace this out as we go through the end of this year and into early next year. If you're right, Paul, it would be a big call, on this one for sure.
Yeah.
Let's talk about Solana. And Solana had big news here. Bitwise, of course, announced their fees. And the fee was crazy because this right here would put Solana in the front of the ETF pack with one of the lowest fees out there. This could really create a lot of activity on the ETF launch for Solana. What would this do to the overall Sol chart, do you think, from where Solana is trading right now?
So honestly, nothing has changed for me from Solana from even like the last time we were discussing it. It's still holding a really nice, kind of a larger high time frame pattern here. And this was called a bullish shark, which is, we covered this last time, just kind of, set up a sequence of Fibonacci's, got set list of rules and ratios. Anyhow, the major targets of this overall is your 0.5 Fibonacci retracement. We came up to that obviously back in July. And as soon as you flip that though, and as long as you're holding it, so 196, as long as we're above $196, I fully anticipate this to reach 274 and ultimately 323 in the near term here. So if something like along those lines kind of comes out, some news breaks, and we get, some of these bigger volume spikes and some of these fees that are kind of inducing or whatever the case occurs, I think that'll be probably what pushes it up. But as far as the technical setup goes, as long as we're above 196, I fully anticipate 274 and 323.
Yeah, and let's don't forget, guys, the end of this year is when Solana does all these events, including Breakpoint, which usually starts to launch. And there's always like a fever that occurs around that because there's big announcements. This may be one of the biggest years yet because of the timing. Last time we've seen these, it's when markets have been low. We've seen Solana down, considerably. I mean, if you go all the way back to like the $8 Solana post FTX, versus where it is. Can you imagine that holding in an $8 Solana?
I know. That was a wild time.
Kind of crazy. Speaking of other opportunities, we got to get into Sui Network. I want to play a clip for you because this is big news coming in from Sui, and how this may play out on the charts is what I want to get your opinion on. But let's go to this clip.
We're excited to share that Eve Frontier will be built on Sui. We've already started the migration work behind the scenes, and the full changeover is planned for 2026. That's when smart assemblies will move over to Sui and be written in Move, Sui's smart contract language.
All right, so this is, if you guys know, Eve, one of the bigger games out there, and it is more of a kind of a forever game that is now being built on Sui Network, which really starts to move Sui into a next level, and maybe even in competition with Avalanche. If you look at the Sui chart right now, Paul, where would you place Sui on the near term, similar to what Solana is doing?
Yeah, so Sui has, I could pull up a couple of like things on it that would be a little overkill, but I'm just keeping it pretty simple with this one. I mean, you've got just a really nice, and this is just simple, trend line consolidation here. But again, it's in confluence with other things that I look at. So it's just a really simple version to put it. We're pretty much, coming to a place where most likely we're going to see a decent little move here. And, alongside some of that they were just speaking on, if we get the breakout here, I'm looking for a couple of major areas. These are, not as attractive. Obviously, it's just a little push back to the highs, but there's some volume levels that come in there. It's trend-based projected gold pocket, but the one that really interests me is up here at 660 and then ultimately 963, which is just below $10. But that's where I can see Sui getting to in relatively near future as well, assuming that again, altcoins kind of pick up here. We get that short squeeze out of Bitcoin. Solana pushes up to 323. That's where I'm looking at on Sui.
There you go. I like it. That's still almost a 3x there with Sui. Let's jump over to XRP real quick. Animoca Brands is now through a limited partnership launching a managed fund over there that's getting into tokenized special purpose vehicles. This will all be done through the XRP ledger. So this was announced. And if you look at some of the companies that are involved in this, and granted, it's a small amount right now, but Animoca has maybe identified some potential opportunities here around tokenizing in terms of RWA within the XRPL. What would this do to this, along with other news? When you look at XRP as a token right now, how would you trade this one today? Because it has been under $3 again after it's really struggled around this $3 mark. What do you think?
So an unpopular opinion is that I really enjoy XRP as far as trading wise goes and the way that it moves. I know that it has these really long periods of accumulation, but sadly, looking at the whole market, XRP outperformed most of the entire market this time around, at least, right? Since at least last year. We got that nice burst from the 50-cent range in basically 1 month, November of 2024 until like December 2025, give us like a 600% rally. And usually what happens when you get this is that you just give it all right back up. So far, you're actually holding it really nicely, which is a good sign. I mean, that's what you want to see, especially from an asset that was compressed for so long here. And currently just looking at some more local areas here, we're just ranging, which of course bores people, like you just mentioned. Like it's below $3 again. It stresses people out. It frustrates you. It's really frustrating if you had just bought it, because unfortunately most people didn't purchase at 50 cents. They're probably buying it along this crazy move because it just seems like it wouldn't stop. And then the music finally stops, right? We consolidate for a bit. We're ranging now. For me, I just have to point out, it's just you're sitting at support. We've come down to this region several times here. I would be prepared for us to actually sweep it, which is just a simple liquidity grab at this point, because we've come down and left them all so far, and we're pretty close to it. But aside from that, we're at the lows regardless of this side. A little move to like 260s again is definitely on the table, but ultimately, I do imagine we actually get a push up from here. And my target for XRP has remained $4.50. This is a trend-based 1-to-1 as far as just extrapolating, again, a 100% move out of this. There's a potential harmonic that completes up in that region as well, which is bearish when it completes, but we'll get to that at another date. And also I like 450 because it front runs $5, which is probably going to be a super psychological barrier that if we get a big move out of XRP, everybody's going to at least target $5 minimum. And so for me, there's a lot of things that line up just for, a front run of that. And then if we were to get to that, that's going to offer up like a 50% pullback from there. So it's just something to kind of have in your mindset there. But that's for me. That's how I'd trade this at the moment. Potentially we could dip a little bit lower again towards these low areas, but looking to rotate out of this range and then break up towards about 450 before we really hit our head again for a sizable correction and sideways again.
Yeah, this would be a good trade if you wait for a little bit more of a downward. If we get a big red day, I think that might be an opportunity there. Let's talk about ETH and Bitcoin, because based on your thesis for 2026, and you look at where Bitcoin it is right now, would you exit Bitcoin right now and move it into ETH? Would that be a play you would do?
What would be the time? What would be the time frame? Is this just moving over into ETH and just sitting for the rest? End of year?
Through end of year.
Oof. Yes. Yeah.
Okay.
I would say that Bitcoin probably hits like 130, 135, and then ETH pushes up to like at least 5 to 7 before the end of the year, before the next rollover, I guess is what I'd be targeting.
ETH is your winner performance-wise through the end of the year. All right, let's transition that, and going back to your thesis of Bitcoin getting a huge correction down into, say, 70 to 80K, where would Ethereum be during that time?
So this is essentially what I've been looking at for ETH for quite a while here is this again, high time frame as you can get. This is a weekly time frame. This is something that obviously we've been building out since 2021. And it is obviously predicated on us pushing through this all-time high once and for all. But ultimately, there's a little, stair step in our way around $5,000. But if we were to really get the gas here in the next few weeks and we pushed it up to this main target area, about $6,000, the pullback on Bitcoin that, we go back to the 70s, 80s, 90s would probably take us back down as well into the $4,000 range to 3,500. So I think we discussed that last time, like 3,300 to 3,500, I think is really the next best opportunity on Ethereum, assuming we push up, higher first, right? So that's kind of where
and I think, if you consider it right now, a lot of people are still trying to figure out, are they going to get into ETH right now with these kinds of numbers? I mean, that's the monthly right there. ETH has been just performing like crazy overall. Even if you go back to just the performance since tariff day, continued to be up. And though it's somewhat trading sideways at 4,300 right now, which is a little bit lackluster, but still trying to press an all-time high. All right, Paul, this has been good. We're going to continue to run some stuff at you through the end of the year, taking a look at a lot of activity, because this is going to be a busy next 3 months. So thanks for coming in today. We appreciate it.
My pleasure, Paul. Have a great one.
You bet. All right, you guys, make sure and jump in on the Diamond Circle. This is a great place for you guys to get additional content from us. Yep. Ready? All right, guys, make sure and jump in on the Diamond Circle. This is a great place for you guys to get additional content. I drop an email to you each week talking about trades I'm doing, what the strategy is on the market. All you have to do is click the link down below and join for free. Catch me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.